I will teach you every highly profitable inside bar trading strategies in this video. Let me start by explaining exactly what an inside bar is before getting into its juicy strategies. Make sure you pay attention. An inside bar is a special pattern on a chart that happens when one candle fits inside another candle. The top of the small candle is lower than the top of the big candle. The bottom of the small candle is higher than the bottom of the big candle. In other words, the small candle's price range is completely inside the big candle's price range. So it appears like a triangle where the ranging price keeps getting smaller and smaller. So this bigger candle is called mother bar candle and the smaller candle is called inside bar. The reason why inside bars occur is because of the market pauses, which happen when bigger traders are waiting for some big event which will affect or influence the market direction. Let me tell you a quick story of how inside bar changed my trading career. When I was still learning to trade, I used to spot a good signal, say for example in 1 hour time frame, then enter a trade. But after entering the trade, the market would stall, move sideways for a very long time without taking off and eventually would hit my stop loss. That continued to happen for a very long period of time until I learned about inside bar setup. Then I started playing with inside bar setups. While I was playing with it, I noticed something in my trading journal. I noticed that almost all the inside bar trades I've taken in a daily time frame ended up being a strong trend or a strong takeoff. That's when I realized the power of inside bar, and then I started investigating further until I discovered more of the juicy inside bar strategies which I'm about to teach you. My trading career changed for the better since. Here is one lesson to take away from this story. Every time you see an inside bar in a daily time frame, then you must know that the market is going to take off or break out with a strong momentum. Alright, let's get into the juicy strategies in no particular order. One of the most profitable inside bar strategies is breakout strategy. Breakout strategy happens when price breaks above or below the mother bar candle of the inside bar. What makes it so powerful is that strong trend that happens after the breakout. It usually happens in the middle of the trend, in the support and resistance zone, and in the ranging market turning points. Here is the correct way to trade it. Enter a long position when the price breaks above the high of the mother bar candle, and enter a short position when the price breaks below the low of the mother bar candle, and place the stop loss order just below the inside bar for the long position, and then for the short positions, place the stop loss order just above the inside bar candle. Then remember that your take profit must be 3 times your risk for all these strategies. Next is the triple inside bar strategy. The triple inside bar is one of the strongest signals that almost guarantees a potential strong trend that is coming up. It's similar to the inside bar. The difference is that a triple inside bar has an inside bar candle within the inside bar candle itself. Basically, it's an inside bar with an extra inside bar candle. You trade it a little differently than the inside bar. You enter a long position when the price breaks above the high of the subsequent mother bar candle, and enter a short position when the price breaks below the low of subsequent mother bar candle, and place the stop loss order just below the triple inside bar for long position, and then for short positions, place the stop loss order just above the triple inside bar candle. Next is Hikage pattern strategy, which is the best setup to catch false breakouts. This pattern starts off by following the inside bar pattern. Then the following setups happen. The first setup is when the candle after inside bar breaks the mother bar candle and then comes back in and ends up looking like a pin bar candle by the time it finishes. And the second setup is when one candle after the inside bar breaks the mother candle and closes above or below the mother bar candle. And then the second candle comes back in the opposite direction than the candle before. You are probably wondering how to trade these setups, right? Let me show you. Let's start with the pin bar inside bar setup. You enter your trade when the pin bar setup finishes and then place your stop loss below the tail of the pin bar. And the second setup, you enter the trade when the second opposite candle finishes and then place your stop loss below both candles. Next is when the inside bar happens after a pin bar formation, which is one of my favorite because it suggests the direction of which the inside bar is going to break out. This setup starts off by a pin bar candlestick pattern, which is followed by the inside bar setup, which is exactly like other inside bar setups you have learned. Again, the power of this setup is the fact that the inside bar itself strongly determines which direction the breakout is going to happen, which becomes an added strong signal. This signal usually happens in key support and resistance areas, and you trade it exactly the same way as other inside bars that you have learned about. Next strategy is combining an inside bar with an exponential moving averages, which is also one of my favorites. The key with this strategy is to use two exponential moving averages to decide when to expect an inside bar setup and which direction you should expect the trend to go. Here's what I mean. By the way, don't worry, I'm going to show you exactly how to set up these exponential moving averages shortly. So these moving averages tell you it's an uptrend when the red line is above the green line, and it's a downtrend when the green line is above the red line. The juicy part about these moving averages comes when it's time to decide whether to take a trade or not. The first way to trade using these lines is when the market retraces to the lines zone and then present an inside bar. And the second way is when the market does not retrace back to the lines and present an inside bar setup above the lines for uptrend and below the lines for downtrend. This one almost guarantees the inside bar breakout trend direction because you are already in a strong trending market. Here is the correct way to set up these two exponential moving averages. In TradingView, go to Indicators and search for Moving Average Exponential. Then in Inputs, set Length to 20 and set Source to High. Then in the Style, set EMA to green color, then press OK. And then move on to create the red exponential moving average. Open a new one and in Inputs, set Length to 10 and set Source to High, and in Style, set EMA color to red, and your EMAs are set correctly. Again, remember that every time you see an inside bar in a daily time frame, you should expect a strong trend direction. All the inside bar strategies you learned in this video work best when you really understand the trend following strategies. Check out this video where I teach you all about it.